So here we are going to basically look at what is the economic impact of the entire shutdown that has happened in India because of the crisis around coronavirus, and what sectors would get impacted. By now, it is amply clear that broadly the global markets are giving a clear indication that something is wrong. And it's not the same as a usual correction that you find in financial markets. All markets are screaming and telling that this is going to be slightly longer in nature. So what are we basically going to cover in the session today over the next few minutes is there's a massive shutdown locally and globally, and everything has stopped. People are working from home. There's a massive damage to the demand, economic demand across the world. So we'll try and decode the following questions. What does it mean in the short run and the long run? How will behaviors change once we come out of it, if and when we do come out of it eventually? What will happen to markets, and what sectors will be relatively unaffected and which ones will be the most affected, right? Most impacted sectors. Now, in this kind of a crisis, it's safe to say that very few sectors will remain unaffected completely. There's only degrees of problem or impact that can happen, but more or less everything is going to get impacted in this kind of a shutdown that is causing a downturn in the demand scenario, right? To understand these scenarios, we do need to look at a little bit of data with respect to what's happening globally, and then what's happening locally in terms of the overall scenarios that play out. There is a demand side issue and there is a supply side issue that gets impacted, right? One, if you close down markets, that restricts supply on one end, and once you close down markets, there are going to be challenges in terms of what happens to the demand of people who were earlier earning and spending. What happens there? So all of this is kind of going to get kind of covered. Let's look at some data around it, right? So the first data point that we have is US unemployment claims. There's sort of a weekly claim that comes out. Average weekly claims from Jan 1967 to early March 2020 was 350,000. At the peak, in global financial crisis, we went to 665,000 claims. In 1980s, there was a recession. We reached 695,000 claims. Last week, we get the first claims at 3.3 million. This week, we got the claims at 6.6 million. These numbers are unheard in the entire history of US. These are people who have not found, who are now filing for unemployment in the US, and this is just kind of 2 weeks into the problem at this point of time, right? The total workforce in US approximately is about 160 million. So this is not a very large number in that context when you look at it, but historically, this number has never crossed, a million. We have seen 2 consecutive weeks now, which have horrendous numbers that have come out, right? Locally, you have some other anecdotal data that is available. So this is March 2020 data for passenger vehicle sales and commercial vehicle sales in India. Passenger vehicle sales, obviously post the lockdown, you couldn't have sold anything. So 23rd onwards, everything was anyway going to go. But if you look at the kind of declines that you've seen, the least you see is guys, Maruti and Hyundai, which is a 40-45% kind of a dip. And this is only half the damage because April is going to be equally bad, right? If you look at M&M, the number is like down minus 88%. That's not where the real story is. The real story is in the commercial vehicles. If you look at the commercial vehicles pack, look at the numbers that you kind of see there, right? The kind of declines that you see, 80 to 90% dip. Even before the shutdown kind of came in, the impact was more or less very clearly visible. And this is probably likely to stay at some point of time, right? For some point of time in the future. If you look at broadly the production being shut down, so globally, in terms of the US scenario, 93% of all auto production was shut. It's going to start now, but that's what has happened. In India, Maruti, Hero Motocorp, Bajaj Auto shut down plants till 31st. M&M has shut down in Mumbai and Nagpur Ops. Tata Motors, Samsung, LG, Godrej, Haier, Panasonic, and Dixon Technologies have all closed factories. These are all consumer durables, guys, not just auto. Consumer durables has also kind of gotten stuck. There's also a manpower issue that basically comes around it, that a lot of these factories basically use contract labor, and these migrant workers have left for their hometowns. Now, you don't know what kind of shortage of manpower that is going to create once you do start production again. Some workers have been asked to vacate hostels. They've kind of gone to their villages. Will they come back? In certain cases, village authorities have kind of warned factory workers that they won't be accepted back if they leave for work at factories. So people will actually willingly leave their jobs in this case for the fear of social stigma in this context. Those are not the only industries. If you look at some of the other industries, then you're looking at TCS is saying that nearly 85% of the workforce in India and elsewhere are now working from home out of 4 lakh employees. Infi said 70% of 2 lakh employees are now working from home around the world. In terms of renewable energy installations, 3 gigawatt of renewable energy installations are going to get impacted. FMCG companies are running into logistics trouble in terms of not being able to find enough vehicles to sort of manage their supply chain. SAIL has seen capacity utilization go down to 50%. Tata Steel has reduced operations. JSW Steel, Tata Steel, Steel Authority of India, ArcelorMittal, Nippon Steel, all of them have kind of cut down. Globally, production have been cut down. Power demand has fallen 30%. 65 gigawatt of local thermal power capacity has been cut down. Diageo has paused India manufacturing. Cement manufacturers have shut down factories across India, right? This is something called as the Baltic Dry Index. This is the shipping rates that are applied across the world for transmission of trade products, basically this thing. So that was doing reasonably okay last year and then suddenly plummeted. This is a volatile data point, so it keeps doing this. It had done this in 2016 as well. So it has to be taken, and it kind of did this and did this. So it keeps doing this, but it does point that global trade has also kind of come to some sort of a standstill, right? That's one set of data that we have, which is pointing to the fact that almost all industries have curtailed production, and that industry that has curtailed production obviously will result in some sort of layoffs of employees. If not now, then what's something that is going to come. So it depends on how long this problem continues, but if it goes on for a couple of months, then probably you're going to see some challenges coming there, right? Now let's look at how many jobs actually are at a risk in India, right? So if there's some article that says 136 million jobs at risk in the post-corona world. There's some paper that says basically the share of informal sector was pegged at 90% overall and 83% in non-farm sectors. India has approximately about 465 million strong labor force. 260 million people, 26 crore people are employed in the non-farm sector, and 205 is the agriculture. So 260 and 205. In this non-farm segment, because people are kind of in the contractual labor here, roughly about 83% or 217 million people, that's the informal workers. So out of this, informal workers are about 217 million. That's 21.7 crore, right? What's being said is that nearly 13 crore jobs are at risk immediately after this. If you talk to the MSMEs and SMEs at this point of time, they could continue for a bit, but then beyond that, it's going to become significantly difficult for them to kind of maintain the workforce because the demand has just dropped off, right? It's just gone off the cliff straight away. And it's very unlikely that post the opening up of this lockdown, you see this demand coming back quickly. So there are multiple issues that are going to come in. Problem one, when does the lockdown kind of open up? Let's assume that opens up mid of April. Problem two, does the labor force immediately come back from their villages and towns and go and join the workforce, or do they wait? So behaviorally, what are they going to do there, right? Problem three, does the demand come back quickly? If you were buying furniture before this, would you continue buying furniture at the same rate or would you wait? If you're buying vehicles before this, would you continue buying vehicles at the same rate or would you wait, right? So if you are going out to eat in a restaurant and, for example, food industry and entertainment industry kind of offers job to a large chunk of, the workforce, would you continue going out immediately after this? That's something that has to be thought through, right? So there is a massive set of job losses that could come up if this continues for a while. In addition, there are other challenges that are at your hand, not on the political front, not on the economic front, but more on the political and social front. So a possibility of a social unrest, you know, you could get more demands for reservation. You could probably have concepts of universal basic income kind of again come into the picture. So it's a tricky sort of a couple of months at this point of time to see where it goes through, right? Let's also look at the sort of demand scenario that you are kind of going to look at in India, right? India is widely kind of divided into three parts, right? India 1, India 2, and India 3. A lot of the people basically try to kind of build business models in India looking at, India 1, India 2, India 3. And while a lot of the people kind of build business models based on, the total population of India, you do need to realize that uh, a lot of the products don't really apply to a large segment of the population, right? So let's first look at, I'll show you a simpler classification here, which has been picked up from a certain blog. You could go and explore, read this blog. It's a good data point. So if you stack up 100 Indians, right, in the form of a pyramid, right, the top 1% will earn 30% of the total, right? This guy is going to earn 30%. That's one guy at the top, right? This guy makes 1.5 lakhs a month. The next 14 are basically going to earn 30% of the total, right? They make 20,000 a month each. The next 30 will make 30% of the total, and they make 8,000 per month each. And the last one, and I'm kind of dividing this not in terms of numbers clearly, but in terms of probably their contribution to the overall income. The last 55 earn 10% of the total and make only 1,500 per month. Now, this is the segment that gets impacted massively. This is like 85% of India's population, and they contribute about 40% to the total and live at less than 8,000 rupees a month, right? For that matter, if you actually include this also, the impact is going to be there for some of them as well. If you earn 20,000 a month and you have not earned anything for a couple of months, or you kind of are off the grid for a couple of months, your salaries don't go up, your savings don't go up, things become tricky, right? Let's go here. This is again some estimate in terms of what are the working members. So obviously estimates change. If you add up 460, 29 and 31, you'll get about 510. So this estimate says India has about a workforce of 510 million people, 51 crore people. India 1 is 6% of the workforce, 3 crore people. This is spread across about 23 million households, right? And obviously more than one person works in these households in any case. And you kind of look at total household population is about 11 crore. Per capita income is $8,800 per annum, right? This GDP, out of this thing is about 1 trillion. Approximately 1 trillion is what you're talking about, what they contribute to the overall GDP of India, right? India 2 is the next segment, which is the next 3 crore in the workforce. These guys have a per capita income of approximately $3,000 a year, right? This would work out to approximately 2 lakh rupees to 2.25 lakh rupees a year, right? This contributes about 300 billion to the GDP. And then everything else comes in India 3, which is the biggest chunk of your workforce, which will have the largest chunk of your informal workforce, which basically supports a lot of businesses that India 1 and India 2 run and are working in these segments. This is where you will have the biggest amount of job losses that is going to come and hit, because these are not things that can be afforded by a lot of the businesses. So if the shutdown continues for another 15, 20 days or a month, the first month government has kind of said that, requested the businesses to pay salaries, but second month onwards, there are a lot of businesses where salaries are the largest component of your sales, right? And if your sales does not go through, you will have a massive problem in terms of especially the services industries. You will have a massive problem in terms of keeping that workforce there. So either you cut down salaries, which for example a lot of the airline firms have done, and a lot of the other consulting firms have kind of announced so far that salaries have to go down, correct? So what are the potential implications of this? You have job losses which are probably coming more so in the informal sector, a little bit in the formal sector as well. You have salary cuts, which are probably coming or have already started happening, because this is an uncertain time and it's very unlikely that you are going to kind of jump again. We might want to address that question as well, whether we think there could be a V-shaped recovery here in terms of the economy. If we find a vaccine tomorrow, probably we could experience probably a sharp retraction of this. But if not, right, till the time we are able to find a proper cure, till the time the last 50 or 100 people are still impacted, I don't think human behavior changes that easily. So this is going to take some time now. Also understand that from an Indian markets perspective, we have practically never really seen a recession, or what global markets are saying as there's probably a similarity of a depression. We have been in a clean bull market. We always believed that 6 to 7% GDP growth is a given. Real GDP growth is a given in India. We always believed that stock markets are going to go up. Right now, this is the first time that in the recent memory of Indian markets, and when I say recent, last 15 years or so, that you remember, that of Indian markets as such, is where you come across a problem that does not solve itself by itself. It might take some time. It could create a deeper cut. You will read statements like, Nifty has fallen so much, Sensex has fallen so much, so the Nifty PE has kind of come down. Remember, PE has come down right now because P has come down. E is going to follow as well. It's not like E is going to stay where it is, right? If you shut down a company for a quarter, you are going to see E coming down. And so PE might not be down in terms of that data. So we'll see what happens. That's just one part of the problem. The second part of the problem is, again, wealth distribution in India. If you look at the wealth pyramid of India, once again, bulk of your population, roughly about, percentage of your adult population that you see, that is figures in white are percentage of adult population in China. Figures in black are percentage of adult population in India, essentially, right? So 92% of our adult population has a wealth of less than $10,000, right? When you say wealth, this is cumulative amount, right? So you're saying 7.5 lakh rupees or less is what we are talking about. If you see a scenario where there are job losses, if you see a scenario where there are salary cuts, not only does your immediate expenditure get impacted in terms of what you do on a day-to-day basis, your savings get impacted as well. So your longer term expenditure also starts getting impacted. So some part of this demand destruction is going to continue in the future as well. If I was earning $1,000 and now I'm going to earn $750 only, one problem is that this entire portion is gone. Second problem is that I will not be comfortable with my wealth being lower. So till the time I build my wealth again, I will not spend anything unnecessarily, right? So we can say a goodbye to the discretionary demand, at least in the near term. And that's probably again what you're witnessing in the markets as well. So what gets impacted negatively, right? Let's just look at a few sectors. Consumer discretionary. Anything that is discretionary, larger value, smaller value, is going to get impacted. If you put yourself in the shoes of India 3 at this point of time or India 2 at this point of time, you will realize that a negligible proportion of the population will go back to their previous consumption patterns. Would you go directly, immediately to kind of, go and watch a movie in April end or May end? If not, entertainment gets impacted. Would you go to a amusement park in May? You won't. Would you go and dine out as often as you were doing earlier? You won't. And this is for segments who could actually afford it. Forget about the ones who will not be able to afford it, right? So part of this problem is coming from India 1 itself, where given a choice, you will still not do it because it's discretionary. And part of the problem is a large chunk of India does not even have that choice. This segment does not have a choice now. So it's not like it's a question of discretionary any longer for them. The product is discretionary, but the discretion in terms of your spending has gone, at least for the next 6 to 12 months, right? So that's a problem. Anything large ticket, autos, consumer durables, higher value retail, when you walk into a mall, look at all the stores around you, you'll realize what that impact would be to all of that, correct? Consequently, everything that does consumer finance, which was financing all these consumer durables and autos, banks and NBFCs catering to this are going to face stress. Remember, historically in India, B2C finance was like the segment that everyone wanted to do. Why? Because small ticket size, no systemic problem, huge market to address, and upwardly mobile population pyramid, right? So your business just keeps growing and growing and growing. This is the first time this segment is going to face a systemic risk now. We have not thought of defaults ever in this system. We should probably think of it now. And that's probably what markets are telling us in this sector as well. IT sector has said there could be a demand slowdown. Why? Because global companies, for them, a lot of the spend is discretionary. Metals mining depend on global slowdown, right? So global GDP is about 70 to 80 trillion dollars. That's what your global GDP is, right? US is about 20 trillion dollars, and we have practically a quarter washout in US, right? 20 trillion dollars is the GDP. You could just break it down into 5 trillion dollar in one particular quarter, right? So this is US. So one quarter is $5 trillion. And the estimates of the dip in GDP in US range between minus 25% for this quarter to minus 50%. Take for a minute minus 50% as the number. That's $2.5 trillion worth of GDP gone. Now 2.5 trillion for the global GDP itself is 3%. So you have a 3% GDP degrowth just because US has a quarter gone, right? And we're not even talking about rest of the world. So from a basic assumption that the word GDP on a nominal basis will keep growing at 4% or so, you are now staring at a -4, -5% kind of a number, which then puts you 3 years back straight away, right? So there is going to be a global slowdown, which is going to cause stress here, which is going to cause stress here. Any business that has high fixed cost, hotels, airlines, is going to get impacted. Travel and tourism is going to get impacted big time because behaviors are not going to change immediately. Because of this problem, you will stop spending anything on residential housing and cement. India, for example, residential housing and residential demand for cement is accounts for about 65% of the cement sales. That's going to, and probably more actually, that's going to get impacted straight away. I mean, if you are in a rural hinterland, this is discretionary spend. You can wait this year and do it next year. So that's going to face a problem. Add to this the entire problem of supply chain disruptions. I mean, if the global lockdowns continue, specifically in China, for example, what happens to chemicals? What happens to pharma? What happens to electronics globally, right? This is your first order impact. This is right there. It's happening, and you're seeing around you that these are businesses that are going to get impacted no matter what. Whatever we want to do. It's only a question of how big the damage could be. Some of them could get sustainably damaged. So within these sectors, firms with debt, right, and I'll write that in capitals, are at a huge risk. Why are they at a huge risk? Is because if one quarter or two quarters get washed out, you don't really know if that demand is going to kind of demand probably will come back in the third quarter, but you might not be there in the third quarter if the stress is not resolved by the government, right? So any companies with a lot of debt are going to face a huge risk, and that's something that we need to keep in mind in these kind of disruptions, right? That's the first order impact. There are second order impacts as well. How does consumer behavior change? How does business behavior change, right? Think about it. All this while, the businesses never tried this concept of work from home. Now they are forced to do it, right? We just saw a few slides back that TCS is saying that 85% of its 400,000 employees are working from home in elsewhere and world, India and elsewhere, right? 70% of this workforce are working from home. Now they never tried this earlier, right? Possibly this was possible all through the time, but they never tried it. Now that they've tried it and they find that this is a feasible solution, what happens next? Right? Will they actually get everyone in the buildings immediately, or will they think that, okay, look, this continues. Why do we need to take this cost? Consequently, what happens to businesses beyond this? Now, this might be good for some businesses, may not be good for some others, right? So we'll have to check those. What do consumers do? We discussed this point, right? Some of this is very straightforward that, assume on 15th April, the lockdown gets off and you're allowed to go out. Would you go out, right? Some concept of this behavior is actually available, right? What is this? This is the details of the reservations on in all of these countries, a website called opentable.com. You can go and check the data. Restaurant reservations and footfalls across these countries in the restaurants and dining places that are on their listing, right? And this is year on year daily data, every date. What is the number of reservations and footfalls in that restaurant as compared to last year same date? So in the beginning of March, you had these numbers at about -5%, -7%, -15% in some cases from last year. At the end of March, and actually after this, it is all -100%. This is where it went to -100%, and then now everything is -100%, which means there is a total lockdown. How does a restaurant survive this? How does the restaurant industry survive this? Right? So what happens immediately after this? Once you remove the lockdown, what happens there? That's one part, right? I'll show you something else which is interesting. So this is a website called tomtom.com, which gives you live traffic congestion data, right? So the blue dotted line that you see is the average traffic congestion in Mumbai in 2019 on these specific days of the week last year, right? The blue one. And you see a peak in the morning, you see a massive peak in the evening, right? Morning peak, evening peak, morning peak, evening peak. So office times is where you see the two clear peaks. The red line is basically what's happening right now, this year. So clearly there is a big damage. This, obviously, once you open it up, would come back. But there is an interesting behavior that you could observe when you look at China. So China has opened up, right? This is what you see in China. Same week, current data as of today, right? So Saturday is here. You see weekdays, the red and blue lines are now kind of overlapping. So you have reached similar demand as probably what was there last year. So people have started going to offices. But what's happening on weekends? Are you looking at Saturdays and Sundays and going out as much as you were last year? No, nowhere close, right? And that basically tells us the logical and standard change in consumer behavior. People will panic and people will be overcautious for a fair bit of time to come. Till the time you do not find a cure to this, would you risk going out as much as what you were doing in January? And the answer for most people would be a clear no. And if that answer for most people is a clear no, and you are not going out on weekends, then basically you can say goodbye to a lot of consumer discretionary that was happening on weekends, right? What does that do to malls? What does that do to retail, especially high-end retail? So go back to this again. What does that do to this entire segment where a lot of the purchases used to happen over weekends, right? What does that do to people, in the value chain who were giving finance to these segments? What does that do to all the jobs that were getting created by those segments? And that's a vicious circle, right? If your retail demand goes off, then that segment does not create jobs. If that segment does not create jobs, that kind of creates a much bigger problem at the lower end of the pyramid, right? So that's another issue that kind of crops up, right? So second order impacts, you could see massive impacts. First, immediate impacts from business spending. If you see, if TCS figures out that all of TCS is just a name, but if companies figure out that a lot of their workforce can actually work from home, what happens to commercial real estate? What happens to autos? Why do you need a car if you're not going to go to office and you can work from home and that works fine, right? And what happens to automation? This is a scenario where robots don't get disrupted by viruses. People do. So if you want to kind of move towards automation, you were thinking about it, now that belief should become even stronger. What does that do to lower level unskilled jobs that are there? If that gets impacted, what does that do to universal basic income as a concept? I mean, if so many people lose the job, what option does the government have? You're staring down the barrel in terms of a recession that is looming, and we are honestly not even used to it. I mean, I can understand some global economies in 2008 actually went through a recession. We didn't. We had a couple of quarters of global markets related frenzy. But if you were in the FMCG sector, what problem did you face there? Did your soap consumption go down? Did your food consumption go down? No, right? But this is the first time we, in recent memory, in our memory of how India works, we are seeing a possibility of a 0% GDP growth, and that's a challenge. How do governments deal with that? What happens with over the top content? I mean, I would, it's food for thought to understand what are these sectors going to do, how are businesses going to evolve. I can't imagine how the cinema business remains in the same shape going ahead. It could just change forever, right? The only possible segment at this point of time that we can think is getting an immediate benefit is probably internet and the telecom sector, right? Make no mistake, I have not spoken anything about valuations of these segments. It is quite possible that some of the companies are already pricing in the markets the worst case scenario that can happen. I'm not saying don't buy the stock or buy the stock, right? Because I don't know. Honestly, it's quite possible that the stock of one of these companies is already pricing in doomsday scenario, right? But from a pure business perspective, I don't think we have seen the worst of what can potentially happen if this continues even for another 15, 20 days, more than what we are expecting, right? So forget the lockdown for a minute. I think this is a 1 quarter problem, at least for each of the economies. So whether we like it or not, March 15th to June 15th is kind of gone, right? And that's a massive damage to a lot of the demand, especially for segments which also have this quarter as a large chunk. For example, tourism, travel, and entertainment has this quarter as a very, very big quarter, and that's getting impacted big time. We can't really do anything about it. There are going to be multiple potential second order impacts that come out of this scenario. With all this demand destruction that is happening, with all this work from home that is happening, what happens to oil sector? Oil demand is going to collapse. If oil demand basically collapses because tourism collapses, world flights do not start at the same point of time, oil prices go down. If oil prices go down, what is the incentive for electric vehicle industry to continue focusing as much on that research? At least the force that was coming because of oil prices being high goes off for a lot of the economies, right? So there are going to be multiple second order impacts of what we are seeing right now. I think the government will have to eventually end up spending a lot more in the next few months. There is no other way out of it but for a big fiscal package that has to come. The government has to move fast in order to safeguard especially the small businesses, because almost 95% of the companies in India are MSMEs and SMEs, right? So if we don't do something quickly for them in terms of giving them a tax break or something of that sort immediately, a lot of them are going to face severe stress in the next few months, and that could result in sort of a cascading impact in terms of things going down. Now, purely from a markets perspective, I'm honestly not sure how much of this is priced in and how much of this is not priced in, right? So if you were to look at the Nifty today and say, okay, based on what presentation we've just had, we shouldn't go and invest, I don't think that is a correct idea, because it's quite possible that certain sectors have already priced in a 3-month drawdown straight away, right? Uh, which ones? There's no way of knowing. That will unfold. But it suffices to say that it's something that we have to be a little bit careful with while making assumptions and immediately going and buying stocks in the markets, because some of the companies could face a lot of challenge in the coming few months. So just be a bit careful with what you're doing with markets in general. That doesn't mean you don't invest. That we've already seen in some of our earlier sessions that probably a good time to start building a good portfolio and start investing. But at the same time, be careful of the issues and first order and second order impacts with a lot of the sectors that you're seeing that could get impacted. What sectors could potentially be okay? I think FMCG should see a reasonable quick demand revival. Online retail should probably see a bump up. So anything online honestly should see businesses should see a good demand bump up, because it's sort of going to be a behavior change that is going to come in. Automation, I think, will see a demand sort of pick up. Real estate is going to see a problem because residential real estate is a big ticket purchase, and commercial real estate, as we said, if companies start working from home, then a lot of them will start reevaluating the idea of, okay, why do we really need real estate, right? We probably can just work out of home and the cost goes down dramatically. So commercial real estate, both in terms of office space as well as in terms of the mall retail space that we see, is going to face a problem in the times to come. Probably your internet segment is going to see a lot of the boost. Your media and content segments will probably see a lot of boost in the times to come, because people will be at home, and so they will be consuming everything that can be consumed off home. So some sectors obviously benefit out of it, others don't. It's sort of a push for a lot of the online segment in India. So that's a forced kind of a push, like demonetization was for digital payments happening. This is sort of an impact, that second order impact is going to come in terms of a lot of internet based businesses in India, and that's probably going to kind of pull us out of a little bit of the trouble in the near future, right? That's broadly it in terms of what our view is with respect to what kind of sectors are going to get impacted. It's going to be a slightly longer affair than what we had initially thought about, or what we have anything of the memory of in the recent past, because till the time every country is able to kind of control this, there will always be this fear of this coming back some way or the other. And till the time we have a vaccine to resolve this, now it's been built in public memory that a pandemic can create a problem, right? This playbook is now there. Till about a year back, nobody believed that this could disrupt the world. Now you would. So the next time there is a small risk of an illness spreading, the impact could be much more forceful in the countries. You will see these shutdowns probably more frequent in a lot of the countries in future as well. So you have to be aware of that. And consequently, that adds a risk premium to all the economies and asset classes in general. So that's broadly it in our discussion today in this session.